All right, we are here. I didn't think I was gonna do one of these probably ever again, mostly because I'm just busy with other things. But you know how much I love doing these, and I have all this stuff in my head. I want to get it out, and I want to share, and I want to hear some feedback. And there's a lot of exciting and a lot of hype. To do that, let me just check to make sure that we are working okay. And yeah, it looks good, I think. I mean, not me, just the thing. So, okay, let's talk about these. So hopefully you'll sort of see the board. I went ahead and sort of try to write some stuff so that ahead of time, so it's as least sloppy as I could possibly make it. But before we talk about Bitcoin, blockchains, cryptocurrency, all this stuff, I have a couple of things. I have some disclaimers. First of all, I'm not an expert in Bitcoin or cryptocurrency or blockchain or anything like that. I'm learning it just like a lot of you, and this helps me to learn it more. So I'm not trying to tell you this is what's gonna happen. I don't have a crystal ball to know what's gonna happen. Actually, I should buy a crystal ball because a lot of clients ask me for guarantees or for what's gonna happen with this, what's gonna happen with that, and I always tell them, well, you know what, actually I don't have a crystal ball, but, and then I go on to explain my reasons for X, Y, and Z, but I should buy one and go, you know, I actually don't, you know what, I do. Here you go. So anyways, so that's disclaimer number one. Disclaimer number two is this is not financial advice. Please consult with your financial advisor before making any money decisions. That's another, and it paused, so I just want to make sure that we are good. Give me a second here. And if this is part of the pause, then maybe I should. Okay, here we go. It's good. I should dance. Okay, anyways, sorry about the interruption. This is not financial advice. That's disclaimer number two. Disclaimer number three is what my vested interests are in crypto, in Bitcoin, and all that. I have very little vested interest, but I'll be completely transparent. This is important that you get from anybody that you listen to in this space, from the president of JP Morgan to a guy that posts a video on social media, right? All the range. What are their vested interests in Bitcoin and cryptocurrency, all these things, okay? It's very important. Keep that in mind. So I'll tell you mine. I'll be completely transparent. I have a very tiny portion of my portfolio in Bitcoin, mostly really for educational purposes, which this is really an educational purpose because I think this is a big experiment. And you'll hear about that in just 1 second. So I'm not here to sell you a course. I don't offer a course in cryptocurrency or Bitcoin. Although if you twist my arm, maybe I should make one. No, I'm just kidding. This is not a sales pitch. This is not you should invest. This is none of that. I'm going to go over some details about how this all works. And if it helps you, if you learn something, you think, hey, this is kind of useful, and this guy is actually not that boring, I'm going to share the video. Hey, that'll be awesome. But if not, that's cool too. Okay, so that's my only vested interest. So make sure that before you listen to all the guys, and it's fine, everybody has a vested interest, but take everything you hear from both sides or from all the sides. It's very easy for these things to be polarized, right? And we live in that kind of society because of social media, hello Facebook, hello social media, that people only listen to what they want to listen to. And you can always find people who agree with you, and then you just go with that. It's very important, sometimes even enlightening, to listen to people that are completely against your point of view and go, what if they're right? Just a thought, right? The economist Jim Rickards, I think, he has some content on Bitcoin that is, it's not, I wouldn't say ugly, but it's not pretty, not nice. But he has so many great things that he says in his content, and people just in social media were just bashing him and just going, oh, you don't know anything, you're old school, blah, 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 instead of, wait, what can we learn from this person in this case? He's got a lot of really cool stuff, even though he doesn't share any of the hype on Bitcoin. Okay, that was disclaimer number one, number two, number three. We're good, okay? So let's go. I do have a question here. Somebody says, can you tell us what coins you believe will be big in 2018? If we get to it, I don't know if we're going to be able to get to it because I want to go through all the stuff. And then on top of that, again, cryptocurrency is not the only coin as you're talking about here, Steve. So, but that's a perfect segue because cryptocurrency is the greater category. And Bitcoin is a type of cryptocurrency. Now, there's the first clarification point we have to draw attention to. We're saying cryptocurrency, and so people might immediately think, oh, Bitcoin is a currency. Right? It's because that's what it's called, right? Cryptocurrency. Well, that's one of the points that we're not sure about. We won't find people who agree on this. Is Bitcoin a currency? Like the dollar, like the yen, like the yuan, like the euro, like the peso, Colombian peso, my home currency. Is it a currency or is it a value storage like gold or silver? Okay? Or is it a security? Is it a stock or a bond? Okay? And to many, Bitcoin can have certainly features of either, right? Certainly other initial coin offerings have a lot of features of securities, right? Which that's a whole other thing. But anyways, that's the first thing that those have not been finalized. The final word has not been said. And does it have to be in one of those categories? Well, I don't think it has to, but for regulation, it does, because this will be regulated, okay? They're going to find a way to regulate it. And even though there's a lot of potential for it to be decentralized in many ways, there will be a big attempt to deregulate, okay? Let me just check to make sure that we're okay on the video. Okay, great. So that's the first thing that I want to talk about, okay? So Bitcoin futures will start to be sold in December 10th and December 18th in two different markets. So this is why, for example, today we saw this huge volatility. If you were following Bitcoin, I think we started below around 13,000 this morning, and even during the morning, by I think it was like 10:30 or might have been like 11 or something, it was like it jumped to like over 19,000. So crazy volatility, and that's what people say. See, it's not stable. It's not good. This is gonna be crazy. And again, I'm not. You'll see that I will put a lot of arguments for and against, because for me it's very important not to have to take a position and then look for confirming evidence to tell me that my position is correct. Both sides have a lot of good arguments, and the truth of the matter is, again, I don't have a crystal ball. We don't know what's going to happen. Whoever says this is what's going to happen, they're just telling you what they think. They're not, a genie. They can't see the future. We really don't know what's going to happen, okay? But we do know this is a nice experiment. Let's see, I have some to the people. Will it overcome the dollar at some time? Hey, we'll get to that. I'll try to get to some things, some of my predictions, what I think could possibly, but then that would be, so when you get into opinions, that's the lowest form of knowledge, okay? That's just, you could just take it and go, oh, okay, that's interesting, put it on a shelf somewhere in your head, or just throw it away, because it's really just that, okay? So basically, Bitcoin is a digital form of value exchange, okay? That's the best way that I can think about it. Now, the problem, if you are brand new to Bitcoin, now if you are already kind of involved in, this might be like, oh, yeah, duh, I already knew that. But I'll cover it just in case. So, the moment we digitalize something, the moment we make something digital, like when we started making songs digital, it was really easy to copy them and distribute them. So this was the threshold that needed to be fixed, because if you were going to have digital money, you couldn't just like copy it. Right? It would be nice, right, to have a copier at home. You just copy your dollar bills, right? But that's not the way money works, right? That, as a matter of fact, this is the reason why we have central banks, so that they can be the third party and go, okay, you're paying this person money. Okay, yeah, you have that money in the bank. I can see it. And so I'm going to pay that person for you. Boom. And so that third party, make sure you don't double spend. Okay? So that was the problem. Now, this problem was solved by the blockchain. Okay? So you're following me so far? Bitcoin is a cryptocurrency. It's a crypto. It's a digital form of value exchange that is verified by a technology that we call the blockchain. Okay, so the blockchain is the technology underneath the Bitcoin. Okay, and so what happens here is that let's talk about the digitalization before we talk about blockchain, because me personally, and this is again opinion, but I think the real value here, the real value on what we see here is on blockchain. Blockchain for me it's really a layer in itself, and I talk about it over here, that the first layer of this interconnected world was the internet. Now, a lot of people use the word internet and the words World Wide Web sort of interchangeably, but they're two different things. The internet was the connection, is the network of networks, okay? Now, the World Wide Web is the system that is able to send packages and connect things so that you can navigate through the internet. So really, what you and I came to know as the internet was really the World Wide Web. That made it easier to deal with information rather than to deal with the connections of it all, okay? Now, on top of that, you have the blockchain. And of course, on top of that, you have Bitcoin. But we'll talk about why that's important. So far, so good on Bitcoin. Now, let's talk about some predictions on Bitcoin. This is what's really happening, guys, okay? So, what's really, and I said I don't claim to know the truth, but just think about it. And again, take it with a grain of salt. Listen to me, formulate your own ideas, make your own decisions. What's really happening here is that we are in a testing ground, okay? This is a test, right? Like I said, this is not a test. Well, this is a test. I think it's a test. But it's a test for real. It's a test with real money, with real risk. There's a lot of people who already made a ton of money. And there's a lot of people who will make a lot of money. And there's also a lot of people who will lose a lot of money, okay? What I expect is going to happen, and we are in a bubble, no doubt about it. We are in a bubble. And the reason that I'm so sort of like, this is a word, a bubble. Well, we're in a bubble because we are, this is a type of value transfer system that people are buying, but they're not really selling. That's why the price is going up, right? It's basically why something goes up in price, supply and demand. So this is the reason, and it's because it's just not widely accepted. The adoption curve is not there. It will happen eventually, but the deal is this: will the curve remain constant as it gets adopted, or will it dip all the way down and then come back up? I think the latter. I think that it's gonna take a pretty good dip. Will it go all the way down to zero? Probably not. Probably not, but pretty close to it. Especially people who have invested at the thousands of dollar level, they will feel like, wow, I just lost everything because it goes all the way down. But let me give you a little bit of a history lesson. See, a lot of people have heard of the Great Depression, right, 1929. And a lot of people have heard of all the people that lost all the money. And what happened? Everybody went into a panic, started selling, and all the prices went down, and everything basically crashed. So, but what a lot of people don't know is that a lot of people in the Great Depression also made a whole lot of money. And how do you make a whole lot of money when something like that happens? You do that by, let's say you have a whole bunch of Bitcoin in this case. Let's say Great Depression or Second Great Depression, or not as great of a depression, 2018, let's pretend, okay? And hopefully this doesn't happen, although we are nearing a financial correction, so keep that in mind. And again, I'm not trying to predict the future. I think so, okay? Do what you will with that information. Bitcoin, let's say you have a whole bunch of Bitcoin, and you have all these thousands of dollars right now, okay? I actually have a Bitcoin over there. I should bring it, it's a little gold in the shape of a coin with the key in the back. I can't show you the key, right? Because yeah. But anyways, it's over there. So what could happen is it plummets, right? It starts to sell out, right? For example, we're expecting a lot of different things to happen the 10th and the 18th. That's why we see all this crazy stuff, because there's one, it could stabilize because of the pressure and of the investors or speculative people shorting the futures, or it could dip 20-30% and kind of just, and then kind of recover and kind of hit there, or it could skyrocket. And of course, it could also dip pretty good. We don't know what's going to happen, right? But this is why people make money, because they're leveraging risk, right? You either are leveraging risk or you're leveraging time. That's the only things that can happen, right? Or you can leverage work and work a lot, but besides, not actually having to do the work yourself. If you want money to work, if you want assets to work, basically you're leveraging versus risk and versus time, and sometimes a combination of both. So what's happening is we don't know that if it's going to go up or down or whatever, but and it could go down really bad. But if we were to just hold on, right? If I were to have maybe, I don't know, 100 Bitcoin, and I just lost everything, and I'm supposed to sell at 100, right, where I will make some of that money back, I will just, I'm just going to sit on it. But you're not going to get anything back. Don't worry about it. I'm just going to sit on it. Because there's always a chance that after this test is concluded, we're testing all kinds of different things. Bitcoin will become, perhaps, reliable, and will become stable, and will become, this is something that can work. And then we have a real adoption by people who are buying and selling and trading and actually using it as a currency. Okay, that could happen. And if that happens, then the price will go up again. Well, guess what? I just sat on 100 Bitcoin, then over the top again. As a matter of fact, this happened to a lot of people in the Great Depression. They, instead of selling really low as things were going really down to get some money back, they just let it go. Or maybe they didn't have time and they just sat on it. And they had all these securities on paper. Well, when they went back up, they were good. Okay? Or also, you can also have cash flow from other avenues, and when Bitcoin goes to completely zero, or it probably won't go to zero, or really low, then you can go, okay, now is my time to buy, because you think, okay, there will be a real adoption later, which I really think it will be, because see, this is the digital disruption curve, okay, and this is Peter Diamandis. I'm gonna try to. A lot of this information I got from like a billion books, okay? So I'm going to try to quote a lot of these people, but if I forget, this is a disclaimer. I don't claim to know all this knowledge. I am really not that smart. I just look up some stuff and I think, oh, this is kind of interesting, and then I put it together, okay? So the first step is digitalization. We already said that. We digitalize money, right? But the second stage is very interesting, according to Peter Diamandis, and I really love this. It's called deception. Because at first, it doesn't seem like it's going to be effective, like it's not going to work. And so we are going to see the bubble burst. But see, this bubble was important because all these resources are being put into this. And so a lot of people are in it, and then everybody starts to get to know it. There's applications, there's software, there's infrastructure, there's community, there's all these human capital being built up by this bubble because everybody's thinking they're going to make a whole lot of money. Kind of like the dot-com boom, right? The dot-com boom gave us the connectivity that we have today. Without that, there was no way all that money would have been spent in infrastructure, like in connecting, putting all these giant cables, across the ocean. Like, who would want to pay for that? Unless they would think, okay, I'm going to be a billionaire here, okay? Well, a lot of those people lost the money, and they had to resell the cables and the connections and the infrastructure at cents on the dollar. But after those were acquired, then we already had that built, and now we just have to upgrade the lasers at both ends of the fiber optic cable, and we're good to go. Okay, so the bubble that we're experiencing right now is just as important. we want that. We want that kind of notoriety. We want that kind of people all putting money in. And again, a lot of people will lose money. So hopefully, if you're watching this video, you really understand. Like, look, this is my mentor, John Paul Mendoza. He says, Gabe, once you put money in the pot, it's not your money anymore. Okay? It feels like your money, and you want to almost treat it like your money. You're like, oh, that's my money, and am I up? Am I down? But you got to remember, once you are playing and you put money in the pot, that is no longer your money. Don't treat it as such. So we're playing a game right now, and you can't assume that's your money. Okay? So all of my tiny portfolio that I have invested in Bitcoin, I can totally afford to lose that tomorrow. If it crashes tomorrow, that'll be a nice experiment. It'll make a nice story, but that's it. My life savings are not there or anything like that. So that's important. So as far as Bitcoin, I think we covered everything. I don't know if I have too many people here. Oh, look at that. Too many questions. Okay, great. Awesome. A lot of interest in this topic. Yes, and especially today, right? The volatility is going crazy. People are spending all kinds of advertising on this right now to get people to watch, okay? So that's Bitcoin. Now, for me, the real value here is the blockchain. Okay? This is where really, I mean, so many things are going to happen because of this technology, guys. So many things are going to happen. I mean, it's just crazy. And the fact that Bitcoin is doing all that is really testing the blockchain into how it can work, right? If you've heard of Ethereum is a type of blockchain, okay? I'll explain what that is. Now, something that's important for just to touch on is that cryptocurrency, the word crypto here, is really talking about, when you're talking about these kinds of blockchain-enabled money avenues, is you're talking about the combination of cryptography, you're talking about a combination of game theory, you're talking about a combination of software engineering, okay? And these things together make this possible. And I don't think I touched on it too much, but the reason that blockchain solves the double spend problem, right? You could just copy $1 if it's digital, but blockchain, because of cryptography is basically mathematical models that give you unbelievable amount of certainty to mitigate risk. Okay, so we'll talk about that when we talk about blockchain. So that's what cryptography is, together with game theory. What is game theory? Game theory is basically the study of mathematical models of conflict and cooperation between reasoning, intelligent decision makers. That sounded really hard. So game theory is like the study of why people cooperate or conflict using math. That was better, right? I think so. So, yes, that's what game theory is. And so we just kind of put that together. Why? Because we have to solve the problem of the double spend problem. And also we have to solve the problem of how can we create trust across the network instead of having a third party be the trust. We'll talk about that when we talk about blockchain. Man, this is going to get really long. Sorry about that, guys. And then software engineering, which is about putting all this stuff together and using software, okay? So that's sort of all that's in there, okay? Let's talk about blockchain, because that's really what I think where the value is. We don't know what's going to happen with Bitcoin. You already got my predictions. You already got what I think will happen. So it's either you go in and you cash out. We call that shorting the stock, or shorting the security, or shorting the investment, or you go for the long haul, right? Again, you're using risk, or you're using time, or a sweet spot in between the two. That's the only things you can do. So, great. So let's talk about blockchain. So blockchain, like I said, is a layer on top of the World Wide Web, that's also a layer on top of the internet, okay? And what do I mean by that? The best way that I found to remember blockchain-based technologies on top is the word atomic. If you can read it here, I wrote it, atomic, which basically stands for assets, trust, ownership, money, identity, and contracts. Now, I don't have time, obviously, to talk about every single one of those, okay? but I'll bring your attention to some of those. So blockchain, an even better way to describe this is the blockchain is technical plus business plus legal altogether. So blockchain is a distributed ledger that works kind of like a database as well. And so again, this is sort of like we get in the, is it a currency, is it a value storage, is it security, right? Is it a database, is it a ledger, or is it a, you know, what is it? What is exactly? Is it some kind of programming language? Is it, what is it, okay? And so what the blockchain does as far as Bitcoin is anytime that there's a transaction or anytime somebody buys a Bitcoin, anytime that somebody mines Bitcoin, and we haven't talked about mining Bitcoin, but maybe that's the subject because it's going to get really long, guys, and I don't want to bore everybody to death here. Basically what's happening here is that anytime there's anything happening, there is a block that gets created and added to a chain, okay? That block is secured by mathematical models that can be checked to verify that they are true, but that cannot be reverse engineered to find out how they were made in the first place. I think that's a way to put it, okay? So, in other words, it's a way of cryptographically secure something for trust. It's distributed trust. So, when we have third parties trust, like a bank, if I pay my friend Tommy some money from my bank account is the third party. It says, oh yes, Gabe has this money, and yes, he's gonna pay Tommy, so here you go. And I take a little cut of that, right? Banks always do that. So what happens in the blockchain though is that no one center verifies, but it's the whole network that verifies. So the whole network, every computer on the network is called a node, and they all have a copy of the entire blockchain, okay? And so even if for example, my computer, I were to hack it, and I were to be really smart, and I'm gonna go hack this, and I'm gonna go, and I'm gonna say that I have 1 billion Bitcoin, boom, right? The computer will go out to check with the network, and the majority of the computers in the network would say, no, Gabe doesn't have those coins, so sorry, and then that would be it. That's how it's verified. It's verified across the network. It's a distributed network of trust, okay? So why is this so important? Well, at first it allows for money, right? That's one of the letters in the acronym, and as you can tell, it's only one of them, right? It also allows for asset classes and different asset distributions to be created there. It allows for trust to be built in. It allows for ownership to be checked. It allows for identity to be checked. It allows for contracts to be smart, really smart contracts here, like in Ethereum, smart contracts. Okay, let's talk about what those are real quick, because I think that's very interesting. So what's important about this blockchain is that being a layer on top of the internet, on top of the World Wide Web, it is a layer that is security first, is encrypted first. It is about securing that information first. See, we didn't think about security when the internet was first invented. We thought, we should connect all the stuff and then we'll worry about it. It was an afterthought, right? And this big explosion of cybersecurity, this is what I put it here, and I put like a little bubble here, like a cloud here, like blockchain is thinking about cybersecurity, because yes, cybersecurity is blockchain is inside the blockchain to begin with. Okay, that's why it's so powerful, because now we're seeing that we really need this really secure things. And as a matter of fact, it can be even more secure because it's secured by a network. So there's no single point of failure. It's distributed. So even if you were to attack one node of the whole thing and you were able to somehow get some information from it, it would be limited, because maybe the information, depending on how the blockchain is constructed, may be completely distributed. So you might just get a few letters from the whole report, and it's actually all the way around. So you would have to hack the whole network to be able to do that, and that would be prohibitively hard. So anyways, that's the thing. Now, talking about trust. So look for these kinds of things to happen, okay? as far as blockchain. So like all this is a test. And again, what is the second stage of digitalization? Is deception. As soon as the bubble bursts, because it probably will burst, it probably will go down, or it probably won't be as awesome. Maybe another cryptocurrency would be better. For example, some of the things that Bitcoin has that are sort of against it are the proof of work. It takes massive amounts of electricity to mine more coins. The economist that I cited earlier, Jim Rickards, I haven't written down. Yeah, he says that right now the miners around the world are thought to use the energy, the electricity of the country of Nigeria, the whole country of Nigeria right now. And by the time they have to mine all the coins, which that's a topic again for probably another video, they'll go all the way up to using the electricity that Japan uses, so which is crazy. So that's one constraint of Bitcoin. Also, another constraint of Bitcoin is the amount of transactions that can be verified in the blockchain versus like credit card transactions. So anyway, maybe we'll fail. Maybe we'll, and I'm sure that some people are going to lose a lot of money. Okay, so don't be that guy. Again, I was in Vegas in October, right? And I've never been at a casino, like never gambled, because I used to say I wasn't a gambler. Okay, I'm not a gambler now, but just hear me out. My mentor John, he asked me, "Hey Gabe, you like to gamble?" And I say, "You know what? I'm not a gambler. I don't gamble." And he says, "Well, I understand you may not gamble at a casino, but we're all gamblers in life. We all take chances, right?" So he's definitely right on that. So I realized, oh yeah, he's right. I do take gambles. So anyways, but I was in Las Vegas, and I thought, and I was with a friend of mine, Alex. If you're watching me, Alex, how you doing? From Paris. I'll say hi to you. And so Alex was in Las Vegas from Paris. He's like, dude, we gotta go. You know, we're in Vegas, man. You know, and he wanted to go crazy. I said, look, I'll party with you. We'll have a few drinks. We'll go to the casino, right? And we went to the casino. So we got some money out and we started playing roulette, right? And it was very interesting because I remember we started getting like a lot of these. I think it was a lot of black, you know. So that's the first thing you play, black or red on a roulette. So a lot of black. So Alex is sitting next to me. We're in this casino table. I can't take my phone now because they're like super like, oh, you can't do that. Security guy comes up to you and says, no, you can't do that. Okay. So, and then Alex goes, man, it's got to fall on red. And I say, well, why does it have to fall on red? He says, because it's fallen on black this whole time. And I said, no, Alex, you don't understand. See, every roll of the roulette is a complete universe in itself. The patterns are only in our head. We are the ones that are looking for patterns. Oh, yeah, it's going to happen here. But the fact of the matter is, this is absolutely, completely random. Of course, unless I'm cynic and I think that they can control it somehow, which I guess they could. But statistically, it could fall 27 times on one color. And it's completely probable. And it's still random. So the patterns are only in our head, okay? So, anyways, and what I thought was interesting is like we were doing these things, and I put some little chips on the numbers, and I got one of the numbers, so I was up by $300 at one point, right? What should I have done? I should have pulled. I should have called it. I should have been like, all right, I'm done, right? But I didn't do that, right? Human nature. I stayed there until I lost everything, but it was fun, right? And I realized that when I took that money out to play in a casino, my mindset wasn't, all right, let's see how much money I can win. My mindset is, I'm going to lose this money and I'm going to have fun doing it. Okay? So, very important. Don't be that person that loses a whole bunch of money, please. If you're somewhat invested in whatever, you can do your thing. I mean, whatever, but make sure it's always money you can afford to lose, okay? Because it's very volatile. Again, it's an experiment. It's an experiment. It's a brand new thing that it's probably for certain will have amazing applications in technology, and we need this bubble, like I said, just like we needed the .com bubble, okay? So, but that will enter a period of deception here because it will crash. And so people will say, the naysayers will say, see, I told you, you shouldn't have done this, blah, blah, blah. Maybe secretly thinking, thank God that it didn't work out for them because I didn't invest or whatever, right? But after the period of deception, then we have really quickly a huge thing up here of dematerialization, right? But it becomes, you don't need tangible money, or then democratization, which means anybody can do it. Demonetization, which means that the banks that are taking cuts from all these different transactions, they're out of the loop because now it can be verified by a third party who's independent and distributed, and then you have disruption, right? So this is what I'm looking out for in the case of the blockchain. Okay, so the blockchain has the ability to, blockchain technology, not the blockchain like there's only one blockchain. The blockchain is, like I said, a layer on top. And eventually probably setting up a blockchain would be as easy as setting up a WordPress website, really. And this is probably going to happen. And so we're going to be able to work with these programs that have blockchain enabled things, and we won't even know that it's blockchain enabled. We'll be able to manage our identity perhaps online and offline in a much better way than remembering a billion passwords and usernames. You see? The blockchain maybe could be integrated into, to triangulate with biometrics, with with things like our Facebook profile, our Google accounts, and everything, so that we can navigate through all these different digital avenues securely, because the blockchain is secure first, not as an afterthought. No, okay, we got to patch it up so it's safe. No, it's secure first. Okay, so that's what I expect. I expect the blockchain also to disrupt, for example, mortgage companies and the whole mortgage industry. I was talking to a guy at a networking event, and he works for a title company. And so I mentioned sort of this, and he just kind of looked at me like, what? Like, this is never going to happen, right? It was kind of funny. I gave a talk yesterday at a small presentation at this other event, and I gave a talk about asking yourself the right questions, and there was a guy that told me, oh yeah, that's how I do all things. Yeah, that's how I do it, which is great. But if you're really asking yourself the right questions and that's how you do things, if I tell you to ask the right questions, your reaction would be, I wonder if I'm asking the right questions, because that is the right question. Okay, and then also the blockchain will allow, for example, what I'm saying about title companies. So what is a title company? A title company sells title insurance. And why do you need title insurance? You need title insurance because the title records are messed up and they've just been kind of all over the place. And so you want to make sure that the property that you buy is really yours. And so they're the ones that sort of look into all the ins and outs and make sure this is all cleared up. And then you buy insurance from them, because in case something bad happens, they'll take care of it. Okay? Well, with blockchain, all records of property, of ownership, will be verified by incredible amounts of mathematical certainty, so that there's no way to violate that. So pretty soon you don't need a third party, because a title company is a third party to verify, yes, in fact, you're selling this land. Yes, in fact, that person owns that land. Yes, in fact, they have no liens against the property. Yes, in fact, this is yours. And in case we mess up, here's some insurance. Okay? So, but that's not going to be needed. We will be able to Google trust the way we Google information now. It will be verified automatically, and it will be secured, and it cannot be changed because of cryptography. Again, I don't understand completely the mathematical implications of it. There's here called Loss of the Game, and I'm learning about all this because I think it's incredibly interesting. But you don't need to know, just like you don't need to know how a bank works now, right? Like when you see your bank statement on your phone or whatever, and you take money out and you send it out, that's an illusion. You're actually not playing with your actual money, right? You're playing with a database that's stored somewhere in a server that points to an entry that says you have this money. And then when you take the money out, you get it. And when you put your money in, you put it in. And so because of this, you develop this trust, and you realize, I can put my money in the bank because I'm going to be able to get it if I need it. I've always been able to. So this is a different type of trust, where we will be like, yeah, this is always happens because of this mathematical certainty. I don't know how it all works, but I know it works. I don't know how the lock, my key works, but I know that no other people cannot just put a random key and then open the door. Okay, that's how it works. So it's definitely a change, but definitely a thing. Okay, I think that would be all, guys. Sorry if it was like super long. I wanted to get it all out of my head and put it all. So, cryptocurrency, Bitcoin, blockchain. Let's take three takeaways. We don't know, takeaway number one. We don't know if Bitcoin is a currency like the dollar, or if it's a value storage like the gold, or if it's a security like a stock. We don't know that. It's yet to be determined. Takeaway number two, Bitcoin and this hype, this bubble, we have the futures that will be going to market here in the next couple of days. That's going to be crazy. Decision time. If you're heavily invested, that's decision time. Are you going to short it or are you going to hold it? Right? So, John, he tells me, Gabe, you always make the same bet. Whether you're up, whether you're down, or whether you're breaking even. That's how you know. But human nature, man. I sure as heck didn't make the same bet, right? I started going, okay, let's go, until I lost it all, right? Anyways, so my Vegas story. So that's what happened. So because of that, we need that bubble. We need this. This is gonna happen, but we're going to have some kind of a dip, something that will, because it needs to stabilize. You can't have a true working currency that you get paid, a couple Bitcoin, and when you go to try to buy toilet paper, you can't even buy toilet paper with 2 Bitcoin, and then maybe the next day you can buy the whole Walmart. You see, you can't have that. So, but it will happen. The volatility is a reflection itself of the uncertainty of the market. Nobody's really knows what's going to happen, but it's really based on, well, what do you think? It's subjective value, right? What's the guy's name? Carl something. He's the guy that developed, the subjective value story, proposition theory. Okay, so what is it? I'll tell you. Is something is worth what people are willing to pay for, which is basically how we move everything. This is why people buy Bitcoin at the prices right now, because that's what they're willing to pay. So great. And then the third takeaway, the blockchain, and this is third takeaway from my information, and you don't have to agree, but the blockchain is where it really is at. And so there's a lot of important innovation that can be invested. So it can be invested in a venture. It can be invested by integrating your own business and just looking at what are the things that are possible here, so that I'm not left behind. Because chances are, blockchain is on top of the internet, and the internet took a little bit to adopt. But if you think about smartphone adoption, was huge. It was super fast. And so I can only imagine blockchain adoption can go really quick, and so you don't definitely want to be the last left behind. But a lot of banks, a lot of dinosaur industries will be taken completely by surprise by this, because for them to start looking at this, it will be like shooting themselves in the foot. But they should probably consider shooting themselves in the foot instead of waiting for somebody else to shoot them in the head. But that's the innovator's dilemma for you. And so that's my third takeaway, that I think the blockchain is the real, or where most of the real value is, which is being tested by this whole thing. And you can remember all the different things that it does by the acronym ATOMIC. Okay? Last thing, I will be at a cryptocurrency, Bitcoin, blockchain, Ethereum conference in Dallas in February. I believe it's February 18th. Okay? So if you guys are interested and you guys are local and you want to go, this is where you find a lot of this information. You can ask people, and again, a lot of people will tell you different things. And so try not to think that you have to take a position. Okay, I'm either for it or I'm either against it. You don't have to. You really don't. But it creates more cognitive dissonance when you don't, and it's a little more work. But it's important because you keep your options open. You keep being smart about it and not emotional. And then just using logic in the back end to justify what you just emotionally decided. So anyways, better you use logic up front. So that's the last thing I want to leave you. That's your conference, and it seems to be like it's going to be a good one. It's not super cheap to attend, but I definitely advise it if you're a business owner, if you're in any of these industries. really you should learn about blockchain and see how it could possibly be used against you, not in a court of law, but in a court of the market, which is implacable, and and there's just nothing else about it. You will get killed there. I'm gonna look real quick, make sure that I don't have any questions here. Do you believe this will end just like banknotes? And if not, why? Ask Philip. And then some tax. Okay, so Philip, it could. Like I said, I think that it's just an opinion, and anybody that says this is what's gonna happen, I would be very hesitant to believe anybody that says this is what's gonna be or this is what is not gonna be, because really the truth of the matter is this is going so crazy in price because nobody knows. If somebody knew, then they're either gonna make a whole lot of money or they're just somebody who's just making something up. So yeah, I wouldn't be like, okay, this is exactly what's gonna happen. We just really do not know what's going to happen with that, and so we just have to make a decision and then see what happens. But make sure that it's stuff you can afford to lose. Definitely nothing to lose your. The economy is going to be pretty good for a little bit, especially 2018. I expect the first half of 2018 to be pretty strong, and so this is a good time to try to get some. It's like the summer, right? And you're working like the ants. They work in their soil and they're gathering the food, because when the fall starts coming and you keep getting your stuff, but then it starts to get cold, and then you really want to have your provisions. You don't want to be in the middle of winter thinking, oh, okay, well, I don't have any food now. What am I gonna do? So this is the time to start really working hard and getting all those for the winters, because the winters always come. And that is just a fact of nature, of the fact of life. It's one of those first principles. So I hope this has been helpful. Like I said, I have no pitch, the conference that we'll be in. I'm not a member of it at all. I know some people who are in it and doing it and sponsoring it, but they didn't say, Gabe, make this video and tell people to attend. I didn't. So if you don't want to go, don't go. So no, I won't put any affiliate links or anything. I'm not invested in any. There's no course for you. There's no movement for you to follow. I'm just somebody who kind of looked up some stuff and thought, hey, this is kind of interesting, and I think this is what's going to happen. And I decided to make a video to help even myself learn it a little bit better. So thank you guys so much. We will see you on, I don't know if I'll make too many of these, but every once in a while I'll definitely be making some of this. If you want to send me messages and comments about this and other things, I'll welcome that. Any feedback, I'm getting better, and we'll continue working, okay? Everybody have a safe and awesome Thursday, Friday, weekend. See you later. Bye-bye.